All right, let's go through some live examples of just finding market structure, kind of different ways to do it. And so this chart that I have on the screen right now is actually the one that I just showed in the previous video. You'll notice that it's our high, low, high, low, high, low, high. And so I actually want to get rid of these. So one of the things that I recommend for new people, you'll notice that that's a line plot. I'm always looking at candles. And so if we're looking at this, if we're looking at this and we're trying to, mark our highs and lows, I do find that a lot of people have a harder time finding highs and lows with candle charts. And so I can actually see, and I would mark probably more than I did in my previous one, but we have, high or low. And I'm just again looking for the major pivots here: low, high, high, low, high. And then we have a low, high, and consolidation period. So that's just a sideways trend here. But notice that this, and maybe you don't notice, but this isn't as clear cut when we're looking at candles. And so what I highly recommend for people that are just starting to look at this, go to a line chart. If you're ever unsure of your highs and lows, go to a line chart. It really does make it, at least in my opinion, much easier because you actually see those peaks. You're not clouded by wicks and other things. And so peak, 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 peak. And that's, if we go back to a candle, that's much more clear than maybe this might be. And going back and forth, you can probably see the difference a little bit. But highly recommend if you're new and struggling with using the candles for highs and lows, it's never a bad thing to go back to a line chart. Nobody's going to critique you for that. First, what I want to start with, though, is a couple of the different ways that people can mark highs and lows. And whenever you are practicing charting or charting in general or going to make trades, always mark your highs and lows. It's not something I do on my own charts because I can, once you do enough of these, you just look at a chart and you can just, you see where they are and you don't have to mark it. You're making essentially a mental note of it. But when you are first starting out, absolutely, actually mark it on your chart. And there's a few ways to do that. One, like I just did, circles works. If you just literally want to circle highs and lows on your charts. I know some other people, and this is a little bit more information. If you just put, actually, we'll just call this our high. And some people will actually essentially mark these things where they have their high, their low. And now we're starting to print our lower high, lower low. And so actually putting text onto these charts is totally fine to actually just tell yourself where these things are. Let's see, one of the other things that I also find, and this is just going over ways to mark them on your chart because it is really important to actually make sure that you are looking at charts. And once it might feel tedious to actually mark a bunch of these while you're charting, but it is actually important because what it's going to do is build the habit of every time you open a chart, it'll be the first thing you look for. You'll look for lows and highs. And so once you get to that point, you don't anymore need to mark these unless they still help you. But it's mostly to build that muscle memory, essentially. And so right now I'm just going over a bunch of different methods of how to find these lows and highs. One other method that I want to go over, and I guess I can probably do this with a line chart or a candle chart. If you're still struggling, and some of these ideas, some people are probably going to be like, I don't understand how you just did that. That makes no sense. That's a stupid method. And if you think that, that's fine. Find your own method. One other thing that I want to do to help try to find the highs and lows is go to this path chart or this path tool. And, whether you're starting an uptrend or downtrend, find your peak. And so we'll find the highest here. And so what our goal is to connect the price from beginning to end with the least amount of arrows, but while covering the most price. And so if I were to make this arrow here and say, look, we made it from our high to the end. Great, we're done. But look at all this information that I've missed here. And so what we have to do is we have to try to fill in as much of that with the least amount of arrows. And so what I mean by that is you go from your peak, and in order for us to cover all of this stuff in here as easy as possible, our best method is just to go down here. Notice that my arrow just went all the way through all of that. And now we have some price action up here that we have to cover. And so we end up going back up. And then we go back down. And then back up. And then back down. And then back up. And then back down. And then back up. Back down. And just over. Okay, so if we notice what I just did, we just marked our high. We just marked our low. Marked our high, low, high. And if this is a method that works for you, that's fine. Like, do whatever works for you. And this should work on, both types of candle patterns, and we can go through and, you can do the same thing here. And so I don't know what's best for every person. Really just find whatever works for you. If you need to put arrows on your charts, if you need to put words on your charts, it doesn't matter. If you're trying to share charts in the group, it may make sense to remove some of that stuff, just to make sure it doesn't cloud out a lot of your a lot of the information you're trying to get across. All right, and so let's mark some of these things. And we can notice that I'm on a day chart right now. That's fine. It's just because it's covering a lot of information here. And so let's assume that, we're not covering from this price action down here. We're kind of just starting. We'll just call this our low here. So we've got our low, which is down here. First spot that price action really turns around is right here. We have a high. Price action comes back down here before it turns around. We have our low. Our next high is right up here because this is that next peak. That price action comes back down here before it turns around, and so this is our next low. Actually, let me reword some of these. This is a higher low because we're comparing it to the previous one. This is a higher high because we're comparing it to the previous one. Higher low. This is a higher high here. And so we notice that this gets a lot more choppy here, right? But we see the path that I'm following. Bang, bang. Right? Hopefully we all see that. Let me actually flip to our line chart for this. So higher high, higher low, higher high. Okay. So what is this one? So I'm going to actually pull out this ray tool here. So if we mark this higher low that I just put here, 50,800, I'll mark this one that's over here, 49,179. Oh, that is a lower low. So what we mentioned is that this was our first caution signal that there is a change in trend. We see the future here, so this is giving it away a bit, but higher high, higher low, higher high, lower low. First thing that we're telling ourselves when we see this is, hey, there might be a higher low or a lower high on its way. And so what do we find out? Sure enough, we did end up getting that lower high. First signal of a trend of a market structure change. Second signal, or essentially confirmation of a market structure change. Huge sell-off. It really is, like, this is why this is so important. Because look at how many opportunities you had in here to kind of figure out, hey, things might be changing a bit. I mean, if we mark the time, so from our lower low printing to our lower high. This is 2 weeks. 2 weeks that you were planning this out, saying, I'm going to watch out for this lower high because, this isn't a good look. People didn't step in and buy up here. And so that ends up happening and markets sell off. But what I want to do is clear all of this, go back to a candles. And so this is a 1 day time frame. This is what I would consider the an intermediate or larger trend at least. What we can do is I can take this and we can go down to a 4-hour chart. And so let's actually mark the time spans that we're on here. So Alt V, and I'll put these lines down just so that we have our time frames, because we'll come back to these spots. Go down to a 4 hour here. Zoom out. Okay, so here's the bars that we just put down. And so on that macro trend, we still see that this is what we were just looking at, correct? We're on the same page there. So that's everything that we were just staring at. But now that we're on a 4 hour, we can zoom into a smaller trend. And so we can zoom into an intermediate trend here. And so now what we see is we had this huge swing. Actually, let me keep that on for now. And so we have these huge swings. And so between this printing this low and this higher low, we can zoom in on just this section that's in here. And what we can actually find, and this is going to get a little bit noisy for a second, but let's use this just peak here. High, low, high, low, high, low. And it gets a little bit noisier. If I could actually, remove one of these. I don't like one of them. Low, low, high, low. All right. And so just to flip this back to a line chart, just to see what we marked. Low, high, low, high, low, high, low, high, low. But what we just found was market structure within the larger market structure. And so this is our macro trend, this orange one here. And this 4 hour chart that we made in here, this blue trend, would be our intermediate trend. And so we actually see that we have a low, a high, we have a higher low, we have a lower high. And so this is a little bit of indecision. This is kind of, almost consolidation to a point, but it's a little bit of just indecision because people are buying it up sooner, but they're also selling it sooner. And then we have a lower high, or a lower low just a little bit, a lower high, lower low. And sure enough, before the market actually continues higher, we actually get a first higher high. And then one higher low, and the market's off again. And so we have these consolidation and intermediate, market trends, and we can do that through, through each one of these swings has that kind of structure to it. And so this is where it really comes to, kind of what your trade plan is. Because if you are just interested in, the huge swings in the market, you really don't care much about data that's too far zoomed in as much as you care about kind of the macro idea. And then further than that, we can go all the way down to a 15-minute chart. I'm not even sure if I'll have enough data to get back to this. No, looks like I don't. But if you get on a 15-minute chart, we can zoom into this one spot where, all of this data this is 1 week's of data. And, there's things all over the place. And so there's a low here, a high here, a low here, a high, low, high, low, high. And as you get to the smaller time frames, it gets a little bit noisier, but you can see that these are all over the place. And this is surely a messy example, but this is because this is kind of, one of those consolidation sort of areas. If I could find the right tool for it. So this is kind of one of those, just sideways trend. There's, very slightly higher highs coming in, very slightly higher lows, but it's also just very choppy. Everything's revisiting the same areas. And this is when you got that confirmation of a market change, is when there was actually a low printed here, and it kept going. But just an example that there are things happening on every single time frame. If you are charting these to practice, essentially, as with everything, I recommend starting off on a higher time frame, where if you were to, kind of chart your market structure, essentially the way that I would go through, let's say that we're looking at this most recent information here. If we were to go through this, I would basically start on the daily time frame here, where we have our high, a low, a lower high, lower low, a very weak high. This is kind of a consolidation, sort of a bit of sideways, but I would start on the higher time frames and then work your way in. Always start from an outside or from a larger perspective and then zoom in.